Hi, welcome to Books to Boardrooms with Dr. Kiran. And today I have the founder and CEO of Carter Capital, Mr. Bilal. Mr. Bilal, thanks a lot for taking your time to come to this show.
Pleasure to be here.
So, for the benefit of our listeners and viewers, I like to know a little background about yourself. So, can you just share a background about yourself?
Sure. So I'm the founder and CEO of Carter Capital. This is a crypto asset management company based out of Dubai, where we are today. I run this entity myself. Before this, I was an investment banker in London. I worked for several years at a US boutique investment bank as an emerging markets distressed credit trader. So I was involved in the traditional markets at an institutional level within a bank for several years, traded assets in many challenging jurisdictions around the world. But I did have this long-standing interest in crypto whilst I was engaged in my career at the bank. During the onset of COVID, I was already managing, a small amount of assets for myself and for those around me in my personal network. At this time, when certain, issues erupted around the world, such as quantitative easing, money printing, and crypto really began to explode, I realized that there was a significant opportunity here to scale an asset management company, which is when I really started to focus on Carter Capital and crypto asset management.
So, what made you leave your a regular job, right, and then you become like an entrepreneur, starting your own and choosing UAE to be the base? So, can you what triggered your entrepreneurial journey?
There's several reasons. So during the time at the bank, when I was engaged in traditional financial securities trading, I felt very keenly that there were many obstacles and inefficiencies in doing this kind of trading. You had, many different stakeholders involved, banks, custodians, law firms that you had to engage with in order to conduct a single trade. It took a very long time to conduct a trade of these, highly illiquid and distressed securities. On the other hand, on a personal basis, I was trading in and out of various cryptos during 2016, 17, 18, seamlessly, without any inefficiencies or barriers, and achieving significant returns along the way. And I began to understand that this methodology of trading had many advantages over traditional financial securities. Some frictions and difficulties, of course, like anything, but generally that there was a very strong advantage to be had there from a trading perspective. Secondly, I came to understand that this sector was expanding massively. The number of users of crypto and blockchain was and is still growing at an astonishingly fast rate. To give you an example, the number of global crypto users today is around 300 million. That figure is growing at a faster rate than the number of people using the internet grew at even in its fastest year. So we're growing at faster than the rate of internet users was growing in the late 90s and early 2000s. The technology has so many different areas of use case, which I'm sure we'll go into during our conversation. And it led me to understand that this really was going to be, and has proven to be so far, one of the biggest value-creating events in our lifetimes, along with the internet and selective few other technologies. So given the excitement of this space, the growth of this space, I decided to jump in, form an asset management company where I would invest in selective coins and tokens on behalf of my investors, which is where my background comes from my institutional investment banking days. And contribute to the growth of this sector.
So you saw an opportunity. On top of that, you identified some problems with an investor like you faced. So you find a right mix how to solve that problem in terms of making the journey much more easy, and then take care of this growth as a segment it is going. I think it's one of the key
Yes.
when anybody want to start about an entrepreneurial venture should consider before they start.
Yeah.
So now you started that. I mean, now you're saying that investing in crypto, I think that's one of the model of your organization. Is it at one point of time people used to say that or invest in internet, and people invested quite a lot in internet, and they all made a lot of companies came in that space, a lot of people made their businesses in that space. Is today's investing in crypto is going to be the similar mode, maybe in another 5 years, 10 years?
It's a very good comparison to make, and it's one that I have made myself, and I've also heard a lot of people make this comparison. When I was at the investment bank and I was discussing crypto with colleagues and peers, a lot of people mentioned that this is a bubble, much like the dot-com bubble, and this is just a short-term boom that is going to dissipate. Well, yes, it did grow at a very fast rate in late 2017, early 2018, before suffering a very sharp contraction in value, much like happened to a lot of dot-com era companies. But nonetheless, significant value was created during that period of time and during the dot-com era. The one differentiation I would make between blockchain and crypto as a whole and the dot-com era is that at the time, one had to make highly selective bets and investments on specific companies. For example, you could have chosen to have invested in Amazon in the late 90s, held your investment through incredibly turbulent times, including multiple drawdowns of 80% plus in Amazon stock value, which would have been a very turbulent time for you to hold that investment, and now you would have achieved a significant profit there. But you would have had to have chosen that particular company with a lot of conviction in your choice out of all of the hundreds and thousands of companies available to you at the time. What is different with crypto and blockchain is that you can invest in the underlying foundations of the industry by acquiring Bitcoin, by acquiring Ethereum, coins and tokens like these, which are the underlying foundations of everything built on top of it. On top of Ethereum, for example, a layer 1 blockchain, one of the main layer 1 blockchains, you have a plethora of NFT, DeFi products which are built on top of it. In the late 90s, early 2000s, one could not simply invest in the internet. You had to be a highly selective stock picker and select the best companies that were available. Now we can see Amazon, Google, Apple, Meta, these are the leading tech companies, but at the time that decision was not so clear. Now one can very easily invest in the underlying foundations of the space.
So we talked about the dot-com bubble and then how the internet has changed. Similarly, I think that's one with the introduction of blockchain and the way blockchain and metaverse and crypto is going. And that then suddenly we start hearing about this terminology called Web 3.0. So can you just throw some knowledge about what is Web 1, how it is different from Web 2, and what is Web 3, and how a common user like me or you should be aware about what's happening in the internet?
Yes, this is a good point. Web 3 is a phrase that we hear a lot about today. It's thrown around a lot, and it can be quite difficult to understand what is Web 3. In order to understand that, one would need to go back to Web 1 and Web 2. And the way I like to think about it is as follows. Web 1 was the initial iteration of the internet. That was, if you can remember, physically plugging a cable into a modem and hearing that strange dial-up sound and browsing. Browsing on singular, publishing platforms like AOL, Yahoo, and browsing information and the initial advent of the email. This was the initial era of the internet and comprised Web 1. I think we can all, recount and recall these moments in time when we used the internet in this way. Web 2, I would argue, is the era that we are still in, which saw the advent of retail and user-created content. So having gone from AOL, Yahoo browsing, now onto eBay and buying and selling, bicycles on eBay, and Amazon, ordering books on Amazon, then into Facebook, uploading pictures and interacting with other people's pictures. From then, so became Instagram, instant messaging, Netflix, YouTube, which is all still user-created content. This is the era that we are in now. And if you can imagine, that era spawned trillions of dollars of value from these big tech companies, some of which that I've mentioned, not just in the US, but globally. And so much innovation in terms of internet speed, deliverability, consistency of internet connectivity. This is the era that really spawned, the huge growth of the internet and Web 2, which we are still in. Web 3, the era that we're transitioning to now, is going to comprise the transmission of value. Instead of me uploading a picture and you commenting and liking on it, I could create a picture, upload a picture, and you would purchase that. You would purchase royalties against it, or you would purchase the rights to then use that picture elsewhere, thereby transmitting of monetary value between us, and obviously crypto being the main rails of value transmission there. We're starting to then see establishment of digital identity. So you and I having a digital footprint across the whole internet and, dare I say, metaverse that we're going to be going into, and the transmission of value between us.
So that's a full revolution, and that's again triggered by the crypto. But today you hear a lot of economic contraction, inflation, U.S. dollar becoming stronger because of the interest rate what they are offering.
Yes.
With all these changes, how does this impact the cryptocurrency?
It impacts crypto massively, and these macro and monetary topics that you've mentioned are things that I think about a lot as an asset manager. To me, there are two things that impact crypto valuations. One of which is technology and user adoption, which, as we've discussed, is still increasing at an astronomically fast rate. Technology is moving forward still remarkably quickly. The second thing that affects crypto valuations is macroeconomic and monetary factors. Now, these are not favorable to crypto at this point in time. Hence why we have seen significant contractions in crypto valuations. Bitcoin is down around 60% so far this year. I use Bitcoin as a reference because it comprises around 40% of total crypto market cap, and thus it's used as a reference for the total crypto market. The reason why it is down is because there are macro and monetary conditions which are not favorable to crypto. For example, as you've correctly mentioned, interest rates around the world, specifically in developed economies, the largest economies, have gone up. Why have they gone up? Because Western economies, developed economies, are trying to fight inflation. Inflation, as we've all felt around the world, is going up and is affecting us on a daily basis. At the gas station, at the grocery store, at the movie theater, all these costs of these everyday items has gone up. Now, wages have not gone up in a corresponding factor. That means people have a lower amount of disposable income, which has caused people to face difficulties. As inflation has gone up, so too have interest rates. Interest rates have gone up in an attempt to reduce inflation, which, as we're starting to see on certain key economic data points, is starting to see inflation plateau and slowly starting to topple over in certain developed markets. When interest rates go up, it makes certain safe assets, safe haven assets like sovereign bonds, government bonds, the yields of those have increased as interest rates have gone up, making them a more attractive investment option for global institutional investors. When these interest rates go up and when these yields go up of these assets, there is a capital flight out of high-risk assets, of which crypto is most definitely a high-risk asset, into these safe assets, which is how we've seen this capital rotation and a reduction in valuation of crypto assets. The next part of this story, as we are starting to see in developed economies, I keep referencing developed economies because the US, as the leading economy in the world, comprises 80% of global trade in US dollars. That's why the actions of the US Federal Reserve and the US dollar are so important. We're starting to see now decrease in economic growth, economic activity. We're entering certainly into a recessionary period in Western economies. What happens in that scenario? Well, the same thing that we've seen time and time again throughout history. These central banks will start to print money again, conduct activities of quantitative easing. We already saw earlier in the month of October, the UK conducted £63 billion purchase of assets on the open market in order to support markets. That will happen now in Europe. I'm looking very closely at the Italian situation. In Italy, I think that could be the next ball to bounce in Europe, and then it will certainly happen again in the US. When that happens, when liquidity is injected into the system and money is printed again, that again creates very favorable conditions for high-risk assets like crypto. We've lived through several eras of quantitative easing thus far. When that era happens again, crypto will begin to flourish again in terms of its valuation.